The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday. 9:06 a.m. Friday morning. Quite the day yesterday. I couldn't host the program thanks to our man Basil Chapman filling in. I'm glad we had a 9 o'clock program because quite a day in the markets. I was watching it all at home, folks. I was taking care of the kids. There was no school. I was working here. Couldn't quite do the program. But boy, I enjoyed watching all those programs throughout the day. And quite a market as we are just shy of 4,000. We were at 37.50 just yesterday. And you talk about a move. If you were watching the markets at 8:30, you saw it. If you were watching yesterday, you saw it. Absolutely remarkable. And today, well, the trend continues as we're up by 20 points. That's 0.5% right now at 39.80. I mentioned we were just within 3 points of 4,000 in the S&Ps. How about the NASDAQ 100? You're talking about basically 1,000 points, man. 10,800 to 11,800 in the span of less than 24 hours. We're just under that level, but you're still positive this morning. You have the Dow up 0.5% right now. The Dow 1,500 points essentially from 32.5 to 34,000 in the Dow. The Russell's up by 11. Bitcoin, not so much the case, man. You got a rally yesterday in Bitcoin, okay? But look at the give up, folks, all right? And the first article I'm going to talk about is going to be Bitcoin in terms of how this thing still may reverberate. Listen, everything, it was a historic day yesterday, okay? And it will be a more historic day if the trend actually continues. It's a historic day no matter what. Records broken across the board, especially with some of the action right out of the gate at 8:30. Biggest day for CPI ever. But guess what, folks? We're living in exceptional times, okay? There's never been the need to react to CPI in this manner in the last, 30 to 40 years? In that regard, there's never been the need to react that way because we're in such an inflationary environment that I, in my lifetime, have not seen in any way. I'm in my 40s. Many people in their 30s or 40s have not seen it to a degree, as in they were the ones responsible for the family paycheck, right, paying the bills, etc. So, of course, market's reacting, but it's 1 month's data, okay? We've seen some variance in this data. And the trend is definitely rolling over right now, but we've seen it before. We live in volatile times, folks, and you really want to see the 3-month average maybe really get to a level that they're comfortable with. And listen, the Fed is going to wait for more data, okay? So you shouldn't think that the Fed is going to move off this number if you're really going to be a huge bull on this number. What you should think is that this number is indicative that future numbers will follow. Future numbers don't follow, it don't matter, okay? But the market, it was a pretty decisive number on the CPI. But Bitcoin, just like that, folks, yesterday, right? You close out the session at almost 18,000. Nope, we're down about $1,300 from there. And realistically, folks, all it is that Bitcoin is trading back where you were yesterday at 5 in the morning. Okay, so yeah, you got a little bit of a lift. Euphoria everywhere in this market, even translating into Bitcoin. But when we have the S&Ps merely 15 points off the high of almost 4,000. You jump back to the chart, and even the NASDAQ, which is where there was so much correlation between Bitcoin and the NASDAQ 100 for so long. Be careful, folks, in Bitcoin, because there's no reason that this needs to be at 16,000 versus 10 versus 5 versus 3 versus $200, man. Now, don't get me wrong, all right? There's 20 million Bitcoins. I was talking to my dad about this. Wednesday. And saying, if Bitcoin drops to some of these levels, right, it is interesting to look at how there's only 20 million of them. So to that degree, at some point, if they're going to be around, okay, they have value, but what is the difference? Because as they said it, the only value of a Bitcoin is what somebody else is willing to pay for you. Now, you can say the same thing for a dollar, okay? Because the dollar is only worth what somebody else is going to take that dollar from you for. Now, sometimes that's for a good, right? But it provides no service but a store of value. You could make the same thing for Bitcoin, just in a very volatile way. nonetheless, let's jump over to the headline because these are just going to be everywhere, man. And the way that Sam Bankman-Fried, and I learned how to say his name pretty quickly on Tuesday, man, as it was everywhere. Isn't that remarkable? It was just the way it was. I hadn't said his name enough, right? You had heard it, but sometimes you hear a name, and when you go to say it for the first times, right, you say, is it Fried? Is it Fried? No, Fried doesn't sound right. It was Fried, Sam Bankman-Fried. I had heard it enough times, but I hadn't said it. I didn't even know it on Tuesday. The whole world, especially in finance, knows it. That's for sure, knows how to say it. But this is going to be the tail of the tape, man, as they go down. So Skybridge, Scaramucci, he's trying to buy back the 30% stake that FTX purchased in Skybridge. Now, what's interesting here, okay, and this is already coming about in terms of the way that he was loaning himself his trading company, client funds. He was collateralizing that loan with shares of the actual company. And meanwhile, if they were all tied together, right? You're collateralizing loans with underlying products that are inherently going to sink if you sink thereabouts. So it's not really collateralized because they're all correlated. So Skybridge is trying to buy back the 30% stake. You have Scaramucci out there. My legal team and other partners are working to buy back that stake, take him off their cap table, unwind the transaction. I would expect so. I'm not sure they're going to get a full unwind here. I bet a lot of people wish they could unwind the transaction. We're in a worse position because of the fact that we made the decision to have Sam join the cap table at Skybridge. There's no question. Well, yeah, Skybridge was pretty big into crypto. They probably are still. And that is not good for them because crypto is going to have a little bit of a cold winter, man, to say the least. Just 2 months ago, FTX, 2 months ago, man. Now imagine how this was all going on, right? Because yes, there was a run on the bank and things crumbled, okay? But he's had this business plan of loaning out to himself client funds for some time. And crypto has been on quite the decline, folks, okay? Backing things up to really put this in fruition in terms of how long, right? You put it on a year chart, there is no reprieve. So look at just a couple months ago, all right? Well, guess what? A couple months ago, it was already at 20,000, man. It was at 20,000 by July. So maybe he was panicking, holding up the cards until CZ tweeted out he was selling 500 million, and that wiped out the whole venture. But how it's interesting is, okay, is that so Skybridge manages about 2.2 billion. It invests in both hedge funds and digital assets. Okay, FTX provided Skybridge with cash to fund growth and new product launches. And here's the kicker. And to purchase cryptocurrencies that Skybridge would hold on its balance sheet. What type of cryptos do you think Sam Bankman-Fried was buying 30% of the fund? And then what kind of cryptos do you think that fund was buying as a result of the injection of capital that Fried put into it for a 30% stake? What do you think? Well, guess what? Here's the quote. Scaramucci, the firm had to mark down some of its securities given the swift decline, and that it had exposure to FTX's FTT tokens and has taken a quote-unquote loss on that. Yeah, right? He talked him up as a visionary, of course. He had FTT tokens. He took money from Sam Bankman-Fried. Fried told him, you got to be investing, I'm sure, in FTT. However that came down, he invested in FTT. FTT goes to zero. And yeah, they're going to try and buy back that 30% stake. I would imagine so. And nonetheless, you see how it goes, though. Quite a deck of cards that they all come tumbling down as everything is intertwined. And this is why there's got to be deals all over the place like this. Scaramucci, he's very well known. He's a political figure. Of course it came out. There's got to be deals everywhere with this type of commingling of action. Stay tuned, folks. We got a lot to talk about. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps up by 12 right now. NASDAQ up by 7. We got the Dow up by 115. My dad's messaging me in the Tiger's Den. Folks, if you haven't checked out the Tiger's Den, please check it out on the front page of TFNN. It's $1 for the year. The only reason we charge you is to basically validate the authenticity of each user, keep spams out of there, keep fake accounts out of there, and it's a tremendous area. I got my dad messaging me in private messages. You can private message in there. We have webinars in there going on as well. And he said, yeah, so he bought 30%. He owns 30% of Skybridge right now, folks. That was their investment. He owns it. Do you know what he paid for it with? Worthless paper, probably in the form of FTT tokens, right? Boy, so that is why this could still reverberate. You know, we have the NASDAQ right now rolling over. I mean, what just happened? Yeah. Since I came on the air at 9 o'clock, we just had the NASDAQ trade down to 65, 75 points, just like that. So we'll see as things go. Yeah, and they're posting, the story's going to persist, man, of he's resigning, and I imagine he's going to have some lawsuits on his hand. And in any other universe, folks, it's horribly illegal what he would have done because of regulations in place, okay? I think it's definitely not moral or ethical. That doesn't make it illegal, though, and it should have been on regulators to corral this a little bit because, unfortunately, a lot of people going to get hurt by this one because regulations are not in place in any way to protect people in this instance. Now, jumping around to a couple of articles, and this one, so this is one opinion piece over in Bloomberg I was reading this morning, okay? Alison Schrager, not really familiar, but I do enjoy a lot of the opinion pieces over at Bloomberg. Burned by crypto, don't learn the wrong lesson. And here's one point, okay? It talks about a lot of things in here. One of the things it's saying is, hey, you can't make these types of returns without a huge, abundant level of risk. You know, you're kidding yourselves if you think you're going to trade something that goes from 3,000 to 65,000 back to 20,000, and you're not playing with fire. In the same way, I was talking to friends yesterday saying, Man, why would you do that? Why would you leverage the entire company by taking loans on customer funds? Why would you do that when you're already, right, a messiah in the whole industry? You run an exchange. Well, guess what, folks? Greed. All right. I put this in the Tigers Den yesterday talking about Tom Brady and the reports there that they dumped their entire wealth into it. I don't think that's true. I hope not. There's only really one news article that's circulating. I said quite the clickbait article that Tom and Giselle dumped everything in there. But you never know, because really smart people have done really stupid things because greed is a heck of a motivator, man. So why would he leverage that? Well, guess what? You don't go from being worth nothing as a brilliant student to being worth $25 billion without pushing the limits, man. Okay? Now, one of the things they put in here, though, okay, now, very difficult for regulators to get a hold of this, okay, folks? But, okay, and this is where we should hold our elected officials accountable who can work on the regulations or construct regulations or put into place regulators to get things under control. But the biggest problem here that they haven't gotten under control of is this one, folks, is talking about that 401ks. It's a failure of any fiduciary that allowed crypto assets into a 401k plan, and I would agree. Okay, that is the biggest failure of all from regulators, I would say. And you can talk about a lot of other things, folks, okay? But if you were putting your money in FTX, right, you should have realized you weren't putting it into a TD Ameritrade or Schwab or Fidelity, okay? TD Ameritrade's our sponsor and our supporter, Thinkorswim as well, so we'll talk about them, okay? As it goes out, FTX is filing for bankruptcy. Pretty amazing, right? He's stepping down as CEO. They're putting in the den. I'm seeing headlines flashing that they're filing for bankruptcy. It's all coming, okay? That's happening. And is that the market reacting? I guess so. What did you think was going to happen if that's the market reacting? Okay, but you got Bitcoin down about $1,700 right now. You're at 16,000. The low is only 15,000, folks. Right, and that is with the market up 10 to 12% over that period of time. So if you were putting money in FTX, rightfully so, you probably thought it was safer than it was. But you have to realize when you're doing that stuff, okay, that this company's headquartered in the Bahamas, like they're saying, okay. They're not regulated, and you're basically just trusting that the company's too big to fail. There's an inherent risk in that. I'm very fortunate when it came to crypto that I had some experience playing online poker because it was a very similar arena, especially when it came to the exchanges, that I understood because I saw it happen so many times back then, folks. And I'm talking about I started playing, graduated college in 2002. Had to think about that for a second. 20 years ago. I got my 25-year high school reunion coming up as an aside. Started playing poker shortly after that, 2003, 2004. Really, I think that's when Moneymaker won things really took off. And I saw the rise and fall of different poker sites. I saw the rise and fall of Ponzi schemes that existed. I saw the rise and fall of brilliant people playing online poker, brilliant kids almost at the time, very young. That did not understand risk, though. Some of them would be worth millions of dollars. They had built it off of nothing, and they had all of their money in full tilt poker, let's say, which was the worst offender of them all. What happened, folks? Well, the government came after full tilt. They shut them down, and the next day, the gig was up, and they said, hey, guess what? We don't have all the client funds that we said we had, and now that you shut us down and everybody wants their money back, we can't give them their money back. I saw it happen over and over. Realize those risks. That's the point, okay? Realize those risks. They might seem small, but there were a lot of people that had a lot of money in FTX, and you saw some of those people taking out that money instantly on day one. That's the other thing, okay? Some people were actually able to get their money out. That's the most remarkable part of this. Usually when the run starts, very few people get the money out. Once the run starts, that's it. They sent out like $6 billion or something like that until they ran out of money. Right? So it was there. So pay attention to that stuff. You can learn from these things. A lot of very smart, brilliant people, okay, got sucked into this with a lot of money. And they should have realized there were risks there that they didn't quite understand or were willing to take. I mean, how do you do that, right? They're just loaning money out. And what are you, trusting them? Are you not verifying that? How's the Ontario Teachers Union putting $400 million in there and they can't figure out what Binance figured out or something, right? I mean, you're putting $500 million into a company And it sounds like they couldn't figure out what Binance figured out in a day, which was there's loans everywhere. Yeah, probably because he wasn't going to show them that. He didn't have to, okay? And they just trusted him. Boy, that is a tough one, man, when you talk about it. So exchanges are in big trouble going forward. I'd be very careful across the board, but realize those risks, man, because I feel like I'm very fortunate to be from the online poker arena when it comes to at least this crypto, because, man, I recognize you're trusting these exchanges. You're just trusting some dude who's set up in Bahamas. He says, send me your money. Don't worry. I'm going to keep it safe for you, and whenever you want it back, I'll send it back to you. No problems. It's like an SNL skit, man, when you actually say it out loud. People just thought he was big enough to fail. I'll tell you a story. So going back, and this is poker again. So 2011, April 5th, 2011, 15th, tax day, okay? That is the day that the government went after the poker sites, Full Tilt and PokerStars, by far the two biggest sites at the time. I only played on PokerStars, folks. I was very fortunate. Because why? Because I started noticing that Full Tilt was very, very poor at doing anything for customer service when they had millions of dollars at stake for customers. Took my money off them, played on PokerStars. Full Tilt ended up being a Ponzi scheme, folks. Listen to those things, especially when you're dealing with risks like this. Bitcoin dropping down 1,800 below 16,000 now. Watch out. We'll be right back for the open.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Cakestat's Tiger Forex Report. Teddy Cakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. It's going to be another interesting day, man, with the headlines flying from crypto. Jumping over to Coinbase, 7.3%. You give back all of yesterday, man. If you're anywhere in crypto and you got a reprieve yesterday, it's probably gone today. And that's a lesson as well, man. You know, you get these crypto stocks trading higher as the crypto basically implosion is taking place, and you're just getting a lift with the market that's, you know, one-of-a-kind type moves. I would have been getting out of Coinbase, man, at 52 or 54 with the market up there, and you're seeing the reaction. Hindsight 2020, I didn't have any action in it. Who knows what I would have done, right? But there was no reason with everything happening, not out of the realm, to see that the implosion was coming like right down the line, folks. Now, if you're not familiar with some of this, how it goes on too, because listen, we talk about a lot of stuff, man, but there's a lot of lessons to be learned in what's happening in crypto right now. And if you can learn them without being one of the poor people that's losing so much, I mean, you can understand, folks, how somebody would have had a lot of money onto FTX, right? I mean, you had some of the most well-known Tom Brady, man, maybe one of the most well-known athletes in the whole world, right? Out there touting it, taking his money, getting paid in crypto, probably keeping it in FTT tokens. That was probably the deal SBF made with everybody, because he needed everybody to keep their money in FTT tokens because he was out loaning those client funds to himself. What were they getting, folks? Another wake up. 8% APY on your user account. This is the stuff that I wasn't even aware of, thankfully, because you see that, right? You say, man, they're taking client funds and you're getting paid 8% APY. How are they making that money? Say, I don't know, man, but this guy's brilliant. He went to MIT. He's worth $25 billion, and they're paying us 8% just to have your crypto trading account at FTX. You know, it's always too good to be true, and it seems that way, and you want to tell yourself it's legitimate until somehow it gets proven that it's not. But I saw that yesterday as well, some of the quotes with people talking about, you know, I put my money into there for the 8% APY. 8%, man. Anyway, so we'll see where that one goes in a big way. The regulation aspect of things, folks, where I go, like I said, all right, there's going to be a lot of talk of, okay, why aren't these exchanges regulated like brokerages, right? Okay, you can say that. That's a much harder conversation, though, because are they brokerages? I don't know about that. They're exchanges. They told users, okay, they're not out there talking about FDIC insured. Okay, they're not. You can only protect people so much, but when it comes to retirement accounts, tax, deferred, tax avoidant, you know, all retirement accounts are beneficial accounts for retirees to make sure that when Americans reach retirement age, that they're somehow able to gain a retirement savings, right, to take care of older generations. There's no way that one we should have been as slow to. We definitely, in some form, should have had regulators saying, okay, you can have self-directed IRAs here, okay, but guess what? We're not letting you buy Dogecoin, man, that's going to zero, okay, because that is an easy way. And I've heard them, man. I've heard them all over the place. I'm pretty sure Bloomberg had ads all over Bloomberg Radio running cryptos in your retirement accounts, etc. 8%. You can see how people can get crushed, man, and that's the deal. All right, let's see what else we have going on in this market. Jumping around to some of the equities with movement. And where do we go to? Let's see. Walgreens. So they're getting a little bit of a lift today. And I'll tell you, this one's interesting, too, because Walgreens up 3.5% on the open. Now, they get Deutsche Bank upgraded the stock to a buy from a hold. Recent meeting with management, increasingly confident of their strategy to transition to a healthcare services company. So they're up by 3.6% today. I'll tell you, I took a trip to Walgreens on Tuesday in the middle of the day just to grab something. I pull into the parking lot, actually couldn't even find a spot. It was like 2 or 3 o'clock on a Tuesday. So what's going on at Walgreens, man? I got to look at that chart, right? That's how your brain works if you're in the market. And boy, it has been quite a tough one. Interesting. When I put that Fibonacci number on there, it's a 100% retracement from the run from October of 2020 up to above $55. We start off the year near $55 and you trade down to 30. But since then, now let's just take a look. We're going to pull that one off on a Fibonacci basis. Let's see what kind of pop we got going right now. Yeah, and watch out for this market, folks. Because, boy, you really start going to the downside. Okay, so all we've done is come up to that 382. which is interesting on Walgreens. We'll see how we trade, but almost to the tick. Isn't that crazy? Look at that. The bar was just at $39.79, and it was trading at $39.79 as I put that thing on there. So Walgreens sitting right there. They do get an upgrade. And, yeah, I would imagine Walgreens, CVS, man, depending on the multiples, that's how healthcare is going to take over. It makes sense. They're going to be a healthcare services company, man. You just go in there and imagine that they're going to have healthcare, doctors, pharmacists, right? They're not even going to need them, though, folks, because everything's going to be on video in the future, right? You're going to be able to have doctors in offices running appointments left and right for Walgreens, CVS, all over Zoom. I mean, it's probably not that long away, man. All right, jumping around to some of the other companies that are moving as this market trades a little bit lower. S&P is only up by 2 right now. You got Intel off 1.3%. Intel, they catch a bid on the open there, but they got a downgrade. JP Morgan rated underweight in resume coverage. So not a downgrade, but they resume coverage and they weight them underweight compared with the most recent weighting of overweight. So technically a downgrade, I guess. They're going to participate in overall industry rebound, but a slower pace due to competitive pressures. So they're going to participate in the overall industry rebound, but at a slower pace. Not what you want to hear, right? If you're Intel holder, even if the industry catches a bid from this lows, they're going to be at a slower pace. We jump around to some of the Chinese gambling stocks. Wynn, 5.7% up there. Las Vegas Sands, I think they're higher as well. Yeah, 4.7%. As you have China easing COVID-19 restrictions over there. It'd be interesting to see what happens with China, man, in terms of how COVID, because they've locked things down for so long that if they really do ease things, they could really have a big problem, man, because their vaccines might not be as effective as people think when they just shut everything down. They probably don't want to admit that. They've been shutting things down when they get 10 or 100 cases. So natural immunity, not even a thing over there. And very difficult to see how that plays out. But nonetheless, you're catching a little bit of a lift on decreased sanctions. Listen to me, decreased regulations over there in China. What else we got? We got some of the companies with their numbers. Yeah, how about not Zoom? Let's jump over to Zoom, though. They had quite the day yesterday, man. They're giving up 1.7% today. But LegalZoom out with their numbers. And they trade a little bit lower, but still double digits, man. Yeah, they pop higher last night. They give it up on the open. You're up 9.3%, better than expected results. Quarterly loss was smaller than the market was looking, and they raised the revenue forecast for LegalZoom. Let's jump around to some of the FANG stocks, see how they're trading. Amazon hangs on to slight gains. They were up at $99 on the open, though, almost. You're at $96, $98 right now. Apple, how about a day for Apple yesterday, man? Apple, what did they create? I heard it yesterday. It was like 100 and they gained the most market cap in any day by any equity ever, right? And what did they do? They traded up probably from 135, and what'd you close at yesterday? 146, so that's like $11. Yeah, they gained like $170 billion because this company has 16 billion shares outstanding. Yeah, 16 billion shares outstanding. And they gained, almost $200 billion in market cap gained. We're going to talk some statistics when I come back as well, because crypto, we're not talking about $2 trillion in losses, man. That's what I read this morning. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we got markets rolling over. A little bit of divergence in terms of where the action is right now. In terms of the Russell, you're up by 0.5%. You have the Dow down by 1/3%. You have the NASDAQ 100 barely in the red, and the S&Ps. I mean, you just gave up, though, folks, 40 points. That's 1%. You're 1% off of where we were last night at 39.97. I imagine the volatility is going to continue. We jump over to crude. We're pushing $90 this morning. Gold contract up at 17.60. Let's jump around to some of the currencies. Dollar index. Talk about a run, man, right? 106.72. 106. Look at that decisive move, folks. That was a well-defined channel line since the beginning of the year. And boy, that is a break, man. We're at 107.21 right now. And what are you back to? I mean, we're talking about, folks, 105 is back to May. And you just pushed a price level of 106.72. Almost back to May in the span of like nothing from 114.77. We'll see if that trend continues, okay? This is 1 month's data. Take it for what it's worth. There's going to be a lot of volatility on the next month, okay? Because guess what? Better live up to expectations. The cool part about going into CPI yesterday, could expectations be any lower? You had the market getting pummeled from the implosion of the entire crypto industry. Meanwhile, the market's looking for continued 8% inflation. The market's looking for a Fed that's going to go higher than the market expected. Expectations in the gutter yesterday. Expectations going forward, far different. You don't get a 10 to 12% pop in the span of no time like that without expectations going up. So we'll see where we go. And, yeah, I imagine it's going to be a very tough weekend, man, where this sorts out. Let's jump back to some of the analysis because the numbers are pretty startling. And trying to put the numbers in context, okay? Crypto peaked a year ago, and investors have lost more than $2 trillion since then. Sam Bankman-Fried leading that charge. But quite a number, right? And I started saying to myself, I said, how much in context is 2 trillion? I can't wrap my brain around it, but how much in context? And we all understand it's a obscene amount of money, okay? But for instance, I started saying, okay, how much did the stock market lose in 1929 on Black Monday, October 28th? They declined 13% in the markets, okay? And that was about $14 billion, I read somewhere. If somebody has a different number, but I believe it's about $14 billion in value in 1929 was lost on Black Monday, okay? It's talked about all the time, right? Well, and then I said, so what's $14 billion worth today? Well, $14 billion today is worth about $243 billion. $243 billion. Well, just in crypto, we've lost 10 times that almost in the last year. To put into context, that would be 10 Black Mondays going on in the stock market. That's in today's dollars, folks. Today's. It's an obscene amount of money. It's going to reverberate, and things are going to get even tougher for the companies that are tied to it in a big way. Markets catch a biff. It'll be interesting to see how they all play out, man. Coinbase, you're down 2% today. Listen, anytime you're taking this amount of risk, of course there's the possibility for returns, folks, because you're going to get paid handsomely if it goes up, because there's such a risk factor that this thing goes to zero, okay? But if I would be putting my money in other areas right now versus in crypto, because the dominoes could just be beginning to fall. CZ, okay, he didn't come in and bail out FTX, rightfully so. Okay, but one of the things that this article talked about in terms of the last year, they talk about when Bitcoin begins to fall apart. Okay, they talk about when CZ comes in and says that they were going to potentially bail out FTX. But in June, the bottom fell out. Okay, now remember, folks. Okay, and I don't even have to look things up. So there's June, the bottom falling out from 30,000. Right? You start chopping around 20,000. We've just been chopping around at 20,000 since then. Well, back in June, folks, when that bottom really started to fall out with Luna falling apart, etc., okay? Well, guess what? Celsius paused withdrawals. Well, Celsius is BK now, right? Binance also halted withdrawals. Didn't BlockFi just halt withdrawals again? So Binance, folks, they've halted withdrawals. That's not getting enough press. I don't know why they did. If anybody in the den knows why they halted withdrawals and why I shouldn't think that it might happen again, because, boy, if you ever get that headline, watch out, man. Right? They did it before, folks. And I imagine that it's at least possible it could happen again. So I wouldn't be touching any of these, man. I mean, you jump over to Coinbase, I'd be taking my money out at $50 in no time right now, because things are a lot worse than they were when they were chopping around between June and August, folks. That was at a low when Luna went BK. But guess what? That was when SBF was going around picking up the companies that were going BK. He's the one BK now, and he's much larger than the companies he was going to pick up. And this is going to be tied to a lot of companies, folks. I mean, you look at ARK, okay? They had quite a pop yesterday, but it would have been a lot bigger if they hadn't gotten pummeled, because they're in there buying more Coinbase shares as their investments are going south in the crypto sector. Now, they're catching a little bit of a lift today, up 1.1%, but they got action everywhere, man. They're one of their biggest investments is Tesla. Zoom is, I think, their biggest investment. Zoom quite a day yesterday, from 72 to 82 this morning. We jump around to some of the other high flyers. Roku gives it back by about 50 cents today, down 1% for Roku. DraftKings, I mean, these growth stocks just through the roof. DraftKings up to about 14, up 2.1% so far today. Let's see, what else do I have pulled up here? Yeah, we could talk about that one. Let me see, the Bondmaster, Scaramucci. Yeah, so these two tie together, right? Is it time for the dollars rally? Not so fast. You know, it's quite a rollover. We pulled it up, folks. All right, technically, I mean, that's a break, man, for sure. Now, you put that on a daily, right? That's a decisive break out of the channel line. No denying it. But that's a decisive break, folks, over 1 week. So, yes, it's a decisive break, but we're going to get a continuous flow of data here, and that's one data point. And we're talking about now being into this by 2 full years almost, where things have really been ramping up, and we got one data point of 1 month. So, we're not out of the woods yet. When it comes to that, our rates higher for longer. Even if the Fed slows things down, they're only going to 50 basis points, folks. The whole party, to put things in context, is that the Fed isn't going to go 75 anymore. They're going to go 50. And then they're probably going to go 25 at least the meeting after that, because they're not going to go 50 and 0. Not going to happen, man. There's no reason to. Maybe they're not going. There's no way they go 50 and 0, because I don't think there's enough data to be so sure to cut things off. Powell took some serious issue when they talked about potentially pausing their rate hikes. So we'll see what happens, man. But we will see what happens, and that's for sure, as we get the dollar down another full point and 13 ticks, as this market, maybe they're not going to let the shirts out so easy, man, regardless of what's happening in crypto. S&P is back up by 12 at 39.73. NASDAQ up by 47 at 11,682. Let's see how Apple's trading as we come into this break. Apple shares down 0.5%, but we just traded up $2 almost, from 144 and change to 146.26. Stay tuned, folks. One more segment. We'll be right back in 3 minutes. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now. It's a little bit of a rebound. You're trading at 39.71. We were approaching 39.50 on the open. Pre-market, we're trading at 39.85. Remember, almost made it right to 4,000 prior to the open at about 4 a.m. Eastern time. Jumping around to some of the articles I was reading. So Treasury Secretary Yellen, and no matter what you think about her, folks, I would agree with this. Don't read too much into cooling CPI data. There's going to be a lot of volatility on the next number, folks. You take a look at this chart, which is really why I wanted to take a look at this article. All right, you have the The core number yesterday for last month, that was the big thing, folks. It was 0.3% on a month-over-month basis, okay, on the core. Take out food and energy. The Fed is going to like the core numbers, okay, because Chairman Powell talks about that they don't have as much control over food and energy. So that's why they like the core. Whether they think that that's a result of inflation that's hitting everybody or not, they think that's where they have control. So they're not going to pound the market with higher rates if they've gotten core under control, because they don't think it would have an impact on food and energy. Okay, so people take issue with them using that statistic, rightfully so, because it doesn't represent the food and the energy that we're all paying for, but they don't think they can control that as much. But take a look at this chart, man. Consumer prices year over year in the red, core is in the black. The year over year has not rolled over. Now, we're going to get some friendly comps because we're sitting up at this level, right, for the last year. We started last September at 4. We've been sitting there for over half a year at 6.3. But folks, we've had some low numbers in CPI in there occasionally, okay? And pay attention to the trend. You want to see a real reversal. Don't get too excited over that one number. Thanks for starting your day with me, folks. Stay tuned. Basil Chapman's up next. Have a great Friday, everybody. Look forward to seeing you back Monday. Have a great one.